India's engineering and R&D services space is set for a growth resurgence, driven by a recovery in the automobile sector. According to JP Morgan, after a slowdown earlier this year, the growth premium is widening, signaling renewed opportunities for investors. However, the global brokerage warns that the sector won't return to its previous premium levels due to persistent weakness in the telecom segment. Despite this, JP Morgan remains optimistic about its growth heroes, KPIT technologies and persistent systems, which have consistently demonstrated resilience and innovation. Additionally, the brokerage sees recovery potential in companies like L&T Technology Services and Cyient, highlighting their strategic roles in the evolving R&D landscape. As India's engineering and R&D ecosystem expands, these key players are well positioned to capitalize on industry tailwinds. Could these stocks be the growth stories investors are looking for? Stay tuned as we explore the sector's promising outlook. JP Morgan highlights Tata Elxsi and Tata Technologies as key players in the ER&D space, showcasing their critical role in driving innovation. Engineering, research and development companies provide vital services for designing and developing devices, platforms, and applications, forming the backbone of industrial progress. For KPIT Technologies, a major deal from its pipeline could act as a significant catalyst, boosting its market position. Similarly, L&T Technology Services and Cyient are poised for a strong third quarter, with expectations to meet growth and margin targets for the fiscal year. However, it hasn't been smooth sailing for ER&D companies. They've underperformed IT peers by 23% this year, facing headwinds from telecom sector weakness and delays in automotive deal closures. Despite these challenges, the ER&D sector remains pivotal for India's industrial future. Could these companies be on the verge of a turnaround? Let's explore their potential further in this evolving landscape. JP Morgan believes that the current weakness in the automotive sector is cyclical and transient, with growth expected to accelerate from next year. This optimism stems from the shift of original equipment manufacturers toward hybrid vehicles, while telecom sector challenges remain more structural. The recovery in the auto segment is anticipated to boost growth premiums for the engineering and R&D space, potentially surpassing IT and expanding valuation premiums. On the market performance front, KPIT Technologies has faced a 7% decline in the past year, while Persistent Systems has shown remarkable growth, with its stock rising 89%. Among analysts, 11 out of 17 recommend a buy for KPIT, estimating a potential 27% upside. Meanwhile, Persistent Systems has mixed sentiment, with 19 of 40 analysts favoring a buy, but the average price target indicates an 8% downside. How will these dynamics play out for ER&D companies? Let's delve deeper into their future prospects. Let's dive into the technicals of KPIT Technologies. The stock had been following a strong upward trend since late 2020, with a clear ascending support line. However, recently, it broke below this trend line, signaling potential weakness in its momentum. Currently, the stock is trading around 1,389 rupees, with a significant support level at 1,297 rupees. A sustained move below this level could invite further selling pressure, while a bounce back could restore bullish confidence. On the resistance side, 1,500 rupees appears to be a key hurdle. For the stock to regain its upward trajectory, it needs to surpass this level on strong volumes. The overall structure still reflects a long-term uptrend, but short-term traders should monitor price action closely for signs of recovery or further downside. Is this a temporary pullback or the start of a deeper correction? Let's watch how it unfolds in the coming weeks. Now let's analyze Tata Elxsi's technicals. After a strong rally through 2021, the stock peaked near 11,000 rupees and has since witnessed a significant correction. Currently, it's trading around 6,689 rupees, sitting near a critical support zone at 5,881 rupees. This level has historically acted as a strong demand zone, evident from previous rebounds. The stock's inability to hold above 7,000 rupees suggests resistance in that area, which traders should watch for any breakout signals. If the price fails to hold the current support, further downside could be anticipated, potentially testing lower levels around 5,500 rupees. However, a strong bounce from here, accompanied by increased volume, could indicate a reversal, targeting 7,500 rupees and above. The overall trend appears weak in the short term, but long-term investors might see this as a consolidation phase. What's next for Tata Elxsi? The upcoming price action will be key to defining its direction. Let's take a look at the technicals for L&T Technology Services, LTTS. The stock has been in a long-term uptrend, supported by a rising trendline since late 2020. Recently, it has been consolidating near the 5,481 rupee level, just below a key resistance at 5,892 rupees. This resistance has proven to be a significant hurdle in the past, with multiple rejections near this zone. A decisive breakout above 5,892 rupees, backed by strong volume, could open the door for new all-time highs. On the downside, the trendline near 4,800 rupee offers a strong support level. The current structure suggests a bullish bias, as the stock remains above its long-term support levels. However, short-term traders should wait for a breakout confirmation to capitalize on potential upside momentum. Will LTTS breach its resistance, or is another consolidation phase in the cards? The coming weeks will be crucial for its trajectory. Let's examine the technical chart for Cyient. The stock saw a strong rally in 2023, hitting a peak near 2,177 rupees before entering a consolidation phase. Currently, it trades around 1,867 rupees, with immediate support at 1,682 rupees, which has acted as a solid floor in recent corrections. On the upside, 2,177 rupee remains a crucial resistance. A breakout above this level could signal a renewed rally and potential retesting of all-time highs. However, for now, the price action suggests consolidation within this range. The stock's medium-term trend remains intact, supported by the higher lows seen over time. Traders may want to watch for volume spikes as a signal of either a breakout or a breakdown from the current levels. Please note, this video is purely for educational purposes and should not be considered as a recommendation to buy or sell the stock. Always consult your financial advisor before making investment decisions.